Happy Friday, y'all. Well, for if you own any stock at all in this current market in the US, well, today was not a happy Friday. If you look at, the price action we had today. Why? What happened? We had the CPI data. CPI printed for the month of May, and the report came a little bit higher than expected, which we're going back to all-time high inflation, especially when you look at rent, you look at food, you look at energy, a bunch of stuff pretty much went higher. Even cookies are more expensive than it was literally last year. All right. So based on this, the market of course overreacted or reacted, I should say, and this was a little bit of expected. As we mentioned on the video yesterday, how to prepare in order to and how to win big based of this inflation, because now we're gonna have recession fears sparking again. Why? Because some people are now thinking that the Federal Reserve will have to go up to 55 basis points. That is 0.75%. I mean, that is 0.75% interest rate increase for the next two meetings, the one for June and the one for July. But now we know they're already committed to have a 0.5% or 50 basis points increase set, and the market, I think, already priced that in. Is that going to be the case? Nobody knows. But that will ultimately be bad for the markets, and that will ultimately also maybe put the economy into recession. And maybe that is the route we have to take in order to bring inflation down. I don't totally believe in that direction, just because inflation that we're seeing now, it's majorly the result of what is happening in Ukraine, and at some point with the supply chain bottleneck smoothing up a little bit, and with people kind of draining out savings, as we're going to talk about it maybe in a separate video, things will cool a little bit, but not just now, because remember, we are always 1 month behind. So maybe, just maybe, next month, for the month of for the report, CPI coming out for the month of June, maybe we will have a little bit of a decline. But still, I don't really expect it, because oil is still very, very high there, and I do believe it's gonna potentially continue to rise slowly, maybe to 145, 150 by the end of summer, just because it's the highest season as people are traveling like crazy. And when when oil is expensive, everything else is expensive. So saw the market today reacted. Dow Jones shading 900 points, and Nasdaq and the S&P 500 almost 3% in the red. Now, how can you react as an investor or maybe a trader based on this news? Because I want to share with you guys, these actual sector performance, because the S&P 500 is composed of these entire sectors. We have consumer staples, utilities, energy, real estate, whatever, right? So this is the performance as of today per sector. Those who outperform the market are communication services a little bit, real estate, definitely energy, healthcare, utilities, and consumer staples. It means if you take stocks that are based and comprised and are trading in these sectors, they did a little bit better today compared to the entire broader market. And this might be an indication to what is actually the entire performance of these sectors year to date. All right, because we have energy on top with 63.2% or 63.3% performance based on this year to date. Since the beginning of this year, energy sector is up 63%. And then after that, we have, what do we have? We have utilities up in 11%. We have healthcare up 4.4%. We have consumer staples up 3.06%. If you go back here to this performance, to the daily performance, look, the same sectors: consumer staples, utilities, energy. What does this tell me? It tells me that if I want to take advantage of this huge transfer of wealth that we haven't seen in pretty much decades and decades and decades now, I want to make sure I'm exposed somehow to these sectors, because these are the ones that are potentially or are kind of set up to be outperforming the entire market. If we look at information technology, it's still down only 3%, and industrial down 11%. So if you want to make sure, in order to win in this current environment where we have high inflation and nobody knows exactly what's going to be the next direction the market is going to take, you want to make sure you are invested in quality companies where, that are oversold, where stocks are oversold, and I will look for people like maybe industrials. I will look for people here within, IT, just because these are not going anywhere anytime soon. All right. Now, if you want to day trade, swing trade, but if you want to make like a long swing trade slash investing in the short term, I will definitely look into consumer staples and energy. But majorly energy. Why? Because despite the fact that this has a huge run up so far in 2022, this is still very, very cheap. When you look at the amount of money from a cash flow perspective, from an earnings perspective, you look at the stock price of all of these companies, they are actually cheaper now than they were in 2020. Because right now they have the entire market in their favor. All right. And because of that, it makes more sense to be exposed to this, because despite this 63% performance so far today, these stocks are still performing and priced as if the oil was still trading around maybe $90 to $85 a barrel. So we have a huge catch up to be made there. And I believe, as people tend to, look for sectors to park the money, to invest the money, look for value in order to get, the most dollar for the bucks, they're going to look at energy. Because, as I mentioned, until Ukraine gets out of, this war with Russia, energy will still be very, very expensive. And until energy is still very expensive, energy stocks will continue to rise. Even if today it seems as if, the bull run is over, but it's still very at the beginning. So that is currently what I'm doing. That's currently my strategy to make sure I'm taking advantage of these huge deals in this current market, because I'm in here for the medium slash long-term play. I want to position myself right now when everything is on sale, but I want to make sure I am selective. I'm pretty selective on huge, big quality stocks. And the bottom line on what is a quality stocks as of today in this current environment is any company that is set to continue to have earnings growing even if inflation is still high till the very end of this year. And the best stock or the best choice according to this strategy for me is energy. That's why 95% of my portfolio right now it's pretty much made up of energy, and I've been talking about this for years now. All right, so let me know in the comment section if you are also involved, and if it is something that will make sense for you. But these are my thoughts. I may be wrong, but as of now, it's working pretty good for me, so I'm sticking to it.